Social Security made the mistake. Then it took half his check. Let me tell you about Michael. Michael was 66 years old when the letter arrived. It came on a Tuesday afternoon in a plain white envelope. He noticed it on the kitchen table after returning from the pharmacy. He had just picked up blood pressure medication and paid for it. He used that debit card for rent, utilities, groceries, and medicine. He also used it for gas for the old sedan he drove. He drove that car to his part-time job at a hardware store. Michael had never been wealthy. He worked 40 years in a warehouse. He lifted boxes and trained younger employees his entire life. He believed Social Security was the one check he could count on. At 62, he claimed his retirement benefits early. It was not the ideal financial decision. He knew that. But ideal decisions belong to people who actually have savings. Michael had a bad knee, a small 401k, and a demanding landlord. So he claimed, and a few years later, he took a part-time job. He worked 3 days a week at the hardware store. He answered questions from customers who needed screws or pipe fittings. He explained why the cheapest tool was not always the best tool. When he started working again, Michael called Social Security. He told them he was earning wages and kept copies of his pay stubs. He assumed the system had recorded the information correctly. For 3 years, his benefit check kept arriving. Every month, the deposit appeared in his checking account. It was not enough to make life easy, but it made life possible. Then the letter came, saying Michael had been overpaid. The amount was $18,412. The government expected full repayment of that money. Michael read the number 3 times. He did not have that money. He did not even have $8,000. Most months, after all his bills, he had less than $200 left. At first, he thought the letter had to be a mistake. He called the number and spent the afternoon listening to hold music. When he finally reached someone, the explanation was not simple. The agency had reviewed his earnings and his early benefits. They claimed the information was incomplete or not processed correctly. Michael said he had reported the wages. He was telling the truth. The representative did not accuse him of lying. The representative also did not erase the debt. A week later, Michael received another notice about his repayment. If he didn't appeal, Social Security could withhold his monthly benefit. When the reduced deposit arrived, Michael stared at the number. His monthly check had been cut almost in half. The rent was due in full, and the pharmacy expected payment. The electric company didn't care about their recalculated benefits. Michael had not bought a boat, nor had he gambled. He hadn't hidden a secret account. He was just trying to survive. This story represents a pattern for millions of older Americans. Retirees, widows, and low-income beneficiaries are all getting notices. The details vary, but the result often looks the same. A person builds a budget, then gets a letter saying they owe. The government wants the money back, and that is the problem. A Social Security overpayment is not always fraud or cheating. It simply means they believe they paid more than the rules allowed. That happens when information is missing, delayed, or corrected later. The system is large, old, and incredibly complicated. Tens of millions receive benefits, and their lives change monthly. Social Security must translate those changes into benefit calculations. When the system gets it wrong, the correction arrives years later. And when that correction arrives, it arrives as a massive bill. From the government's point of view, recovery is a legal responsibility. If they paid too much, they are required to collect the money. From the beneficiary's point of view, the situation can feel impossible. The money was not sitting untouched in a savings account. It was spent on rent, food, insurance, medicine, utilities, and transportation. The agency is trying to correct a balance sheet. The beneficiary is trying to keep a roof overhead. Both can be true at the same time. That is why the overpayment process matters. The letter is not just a bill, it is a deadline. And the mistake many people make is treating the letter like a final judgment instead of the beginning of a process. When Social Security sends a notice, it should explain the amount, the reason, the repayment options, and the beneficiary's rights. Those rights matter. You may be able to ask Social Security to reconsider if you believe you were not overpaid, or if you believe the amount is wrong. You may request a waiver if you agree it happened, but it was not your fault and you cannot afford to repay it. You may request a lower recovery rate if you agree the debt exists, but cannot afford the proposed withholding. These are different choices. A reconsideration says, I disagree with the overpayment decision or the amount. A waiver says, I should not have to repay it because I was not at fault and repayment would cause hardship. A lower recovery rate says, I will repay, but not at the rate you are proposing. Confusing these options can cost people time. Michael's first instinct was to say, I don't have the money. That was true, but it was not enough. The system needed the right form, the right request, and the right evidence. If he disagreed with the debt, he needed to request reconsideration. If he believed he was without fault, he needed to request a waiver. If the withholding would make it impossible to pay rent, he needed to request a change in the recovery rate. A phone call alone might not protect him, and a complaint alone might not protect him. A folder full of pay stubs might not protect him, unless those records were attached to the correct request. This is where the story becomes more than emotional. It becomes procedural. Social Security will generally wait at least 30 days, plus 5 mail days, before it begins collection. If the beneficiary submits a request before that time, collection should not begin until Social Security makes a decision. That sentence can determine whether a person keeps enough money to pay rent. But many people do not know it. They read the letter, panic, and put it in a drawer. They call once, cannot get through, and give up. They assume that because the notice came from the federal government, there is nothing to challenge. By the time the reduced deposit appears, the most important window may already be closing. In 2025, the overpayment issue became even more urgent because the default withholding policy changed. For many Title II benefits, the agency moved to a much higher default withholding rate. Reporting described a shift from 10% to a 50% default withholding rate. That distinction matters. A 10% reduction is painful for many retirees. A 50% reduction can be destabilizing. For someone receiving $1,600 a month, 50% means losing $800. That can be the rent, the car payment, or groceries and electricity. A budget that was already fragile can collapse in one deposit cycle. The official notice controls the timing, amount, and rights in each case. Rules differ between benefit types, and supplemental security income has its own limits. But the broader lesson is simple. Do not ignore the letter, and do not assume the first answer is final. Do not wait until the reduced check arrives. The overpayment system has 3 traps. The first trap is shame. Many people receive an overpayment notice and immediately feel accused. They think the government is calling them dishonest, and they feel embarrassed to tell their children. They do not want to ask for help because the letter makes them feel as if they did something wrong. That shame helps the system move forward without resistance. But an overpayment notice is not a criminal conviction. It is an administrative determination. It can be questioned, reviewed, or waived. The second trap is complexity. The words sound similar: appeal, reconsideration, waiver, recovery rate, and repayment plan. To a lawyer, those words describe different legal pathways. To a frightened retiree, they all just blur together. That confusion can lead someone to file the wrong request or miss a deadline. The third trap is delay. Overpayments often build slowly, and a small monthly error can grow into a 5-figure debt. Once the agency identifies the overpayment, the response window can feel very short. The system may take years to find the problem, but the beneficiary may have only weeks to respond effectively. That imbalance is what makes these cases feel so harsh. Michael's daughter, Anna, eventually stepped in. She was 42, worked full-time, and had 2 children of her own. She did not understand Social Security law, but she knew how to organize documents. She asked her father for every notice, and she made a timeline. When did he claim benefits, and when did he return to work? When did he call Social Security, and did he keep confirmation numbers? Did he have wage reports, and did he receive letters about his record? What years were included, and what calculation did they use? The first breakthrough came when Anna asked to see the underlying explanation. Not just the amount owed, not just the final number. The calculation. A five-figure debt can be built from hundreds of small assumptions. A wrong month, a duplicated wage figure, or a missing report changes the result. Anna also helped Michael complete the forms. They requested reconsideration because he believed the amount was wrong. They requested a waiver because he could not afford repayment. They requested a lower recovery rate because losing half his benefit was impossible. They attached bank statements, rent receipts, utility bills, and prescription costs. They did not simply say, "This is unfair." They showed why the current withholding would create hardship. That is the difference between anger and evidence. Anger explains how a letter feels, but evidence helps a case move. Months later, Michael did not get everything he wanted. The entire debt was not erased, and part of the overpayment remained. But the recovery rate was reduced, and the monthly withholding became manageable. He could keep paying rent while the dispute continued. That outcome was not dramatic. No one apologized on camera, and no official admitted the system failed him. But Michael kept his apartment. In this kind of story, that is not a small victory. Here is what families should do if an overpayment notice arrives. First, read the entire notice immediately. Look for the amount, the reason, the date, and the deadline for action. Do not rely only on the first paragraph. Important rights are often buried in later pages. Second, decide what you are challenging. If you believe there was no overpayment, request reconsideration. If you believe you were not at fault, request a waiver. If you can repay but not at the proposed rate, request a lower recovery rate. In many cases, people may need more than one request. Third, gather proof. Do not send only a personal statement. Collect pay stubs, W-2S, tax returns, and bank statements. Gather lease agreements, utility bills, medical bills, prescription costs, and letters from Social Security. Include confirmation numbers and records of prior reports. If you reported a change, try to prove when and how. Fourth, file quickly. Do not wait until the last day. Collection rules depend on when the request is received, not when you started worrying. A timely request for waiver can stop collection while Social Security reviews the request. Fifth, ask for help. Contact your local Social Security office or call them directly. Reach out to legal aid, an elder law attorney, or a trusted family member. If you are dealing with SSI, disability, or complex work rules, specialized help is important. Sixth, keep copies of everything. Every form, every fax confirmation, and every mailing receipt. Keep every name, date, time, and reference number from every phone call. If the dispute continues, the paper trail may become the case. The larger lesson is not that Social Security is worthless. For millions, it is the difference between basic stability and poverty. It is one of the most important retirement and disability programs in the country. The lesson is that essential systems make decisions people do not understand until money disappears. A benefit check can feel permanent because it arrives every month, but eligibility rules continue in the background. Work rules, income reporting, and complex family rules continue in the background. When the system decides the past was calculated incorrectly, it tries to recover money from the future. That is what happened to Michael. He did not lose half his check because his rent went down. He did not lose half his check because his medication became cheaper. He lost it because the government concluded the past was overpaid. They decided that future checks were the easiest place to collect. That is the quiet power of an overpayment notice. It reaches backward in time to create a debt. Then it reaches forward in time to collect it. The person in the middle is often old, sick, disabled, or living on a fixed income. So, remember this. If Social Security says you were overpaid, do not assume the agency is always wrong, but do not assume it is always right either. Ask for the explanation, check the calculation, and file the correct request. Document hardship and act before the check is cut. Because in retirement, losing half a monthly benefit is not just an accounting adjustment. It can be the difference between staying housed and falling behind. It can be the difference between filling a prescription and postponing it. It can be the difference between a difficult month and a financial emergency. The letter may look like paperwork. For someone living on Social Security, it can feel like the floor has moved. This video is for educational purposes only. Social Security rules, overpayment procedures, deadlines, and benefit types vary by situation. Recovery rates vary by situation and can change. Anyone who receives an overpayment notice should read the notice carefully. Contact Social Security, a qualified benefits counselor, or a legal aid organization. Consult an attorney about their specific circumstances.